vocabulary. Capital is the money used to start a business or start or expand. Okay, so capital is the money used to start or expand a business, and it ends up being an expense of the business. Expenses are money that you spend. A sole proprietorship is a type of business. Sole means one, so it's a business owned by one person. And that person is personally liable. Okay, so if you own a sole proprietorship, you own your own business, you're personally liable for any expenses or losses. Let's say you go out of business and you had some credit accounts with suppliers. Just because the business no longer exists, if you're a sole proprietorship, you are personally liable. You still have to pay those creditors. If you get sued, if your business gets sued, you're personally liable for anything that you're being sued for. Profit, those are earnings. It's the money left over after expenses. Now, if you're a sole proprietor, all the profits are yours, right? Because so even if you own a business that employs other people, after you've paid their paychecks and after you've paid, the rent on your building or whatever, any money that's left over is yours. That profit is yours. Okay, and then we have personally liable, which is being personally responsible. Okay, partnerships occur when a business is owned by two or more people. Okay, it's not always equal. So let's say, for example, one of you and I went into a business together and I put up 75% of the money, you put up 25% of the money, I'd own 3/4 of the business. So it's not always equal, but that's up to the partners to decide. But each partner is still personally liable. Now, again, though, you may not be equally liable. If I own 75% of the business, I would own 75% of the liability. But all the partners are personally liable. Corporation is a business entity or business organization that has all of the same rights as a person. Okay. It can be owned by one or more people. Okay. But there's limited liability. So if I own a corporation and my corporation goes under, my corporation is responsible for any losses or expenses that I had outstanding, or that the business had outstanding. The corporation, the business itself is liable. I would not be personally liable. Okay. And if more than one person owns a corporation, they have shares of stock. These are basically, they're just pieces of paper. Okay. So if I own a corporation, I can own all of the shares of stock. Or I could decide to sell some of my shares. Shareholders are people that own the shares of stock. And you're a shareholder if you own even just one share of stock. And those are in a corporation. I'm just going to put corporation, corp. You guys get that right? Yeah, good. Okay. Shareholders are the owners. So everybody that buys stock in, let's say, for example, Microsoft, every single person that owns a share of Microsoft owns part of the corporation. Now, if I own 3 shares of Microsoft, do I have any real power to control anything Microsoft is doing? Absolutely not. Because I only own 3 shares. I own this tiny little itty bitty piece of Microsoft. But I still do own that little itty bitty piece. It's like this. When I was 8, somebody purchased for me a square inch of the Sanford Zoo. I own 1 square inch of the Sanford Zoo to this day. Now, not a whole lot you can do with 1 square inch of the zoo. I don't even know which square inch I own. But that's sort of like if I own 3 shares of Microsoft, that's kind of the same thing. I can't really do anything. Like I can't go to the zoo and be like, on this 1 inch right here, I want you to build, you know, it doesn't work. Okay. Limited liability, the owner cannot lose. Okay, so again, let's say I have my 3 shares of Microsoft. And somebody comes up with, that looked weird. Somebody comes up with a completely new operating system that just blows Microsoft out of the water. And the company fails, completely goes under, goes bankrupt, it's done. I'm an owner of Microsoft, but they're not going to come after me and take my house or anything. Like I can't lose anything other than that my 3 shares of Microsoft will become worthless. That's all. That's the most I can lose is the money that I bought the stocks with. I can't lose anything else. And then I had mentioned there were public corporations and private corporations. Public corporations are corporations where anyone can buy stock. Okay. Microsoft is a public corporation. I can go buy shares of Microsoft. Now there are private corporations. I can't purchase shares of a private corporation. And the way that works is if I, as a person, decided to open a business and I decided I wanted to incorporate, I could open a corporation. That would prevent me from being personally liable for the expenses of the business. and I would technically own all of the shares of my stock, but you couldn't buy shares of my stock because it's my business, it's privately held. For a corporation to go public, there are a lot of criteria that have to be met. Like, I can't tomorrow start a corporation and the next week go public. It doesn't work that way. There's more involved in that, and we'll get into that a little bit later. How we figure it out. Michelle invested $15,000 in a partnership that has 4 other partners. If the total investment of all the partners is $240,000, how much does she own? Okay, so Michelle is 1, and then you got 4 other. So how many partners are there? 5 partners, right? 5 total partners. Okay. Well, we've got Michelle's total. Okay, to find a percent, I want to review that really quickly. To find a percent, you divide the part by the whole, and then you multiply it times 100, and that gives you a percent. Okay, so my part is 15,000. That's Michelle's part. And the whole amount of money invested is 240,000. I'm going to multiply that by 100, but for right now I want to show you guys something. When you're dividing, you have a bunch of zeros. Zeros will cancel each other out, so you don't have to really deal with them. You can do 15 divided by 240. Just less to deal with. And then through the magic of, I've already done this on my calculator, I get a decimal. Now, I am technically multiplying it by 100, or I can just move the decimal 2 places over. Michelle owns 6.25%, or I can do 0.0625 times 100. Get the same answer. So however you like to look at it, you can either move the decimal place over 2 places, or you can multiply by 100. It gets you the same place. Now we have this company called the Bulls Corporation, and the total number of shares that exist are 650,000. And Mike owns 12%. So how many shares does he own? Well, if I take a percent and I multiply it by the whole amount, I get the part. So I'm going to do 12% times 650,000. But I can't multiply 12%. I have to turn that into a decimal first. I could divide by 100. So I can do percent to decimal. There's 2 ways. I can either divide by 100, or I can move the decimal place 2 to the left. Yeah. So if I do that, I'm doing to here. So I have 0.12 times 650,000. And that is going to be 78,000 shares. Where we have $900,000 to open a garden and landscaping store. Their investments are on this ratio of 2 to 3 to 5. Okay, so how much does the partner that invested the least contribute? Boom. Whenever you see this becomes 2x, this becomes 3x, and this becomes 5x. That's how we deal with these ratios. And if I take them all together, that equals $900,000. So the ratio is 2 to 3 to 5. So x is just some dollar amount. And so this is 2 times that dollar amount, 3 times that dollar amount, and 5 times that dollar amount. That's the ratio that the partners invested. So I add those together and I get the total. Okay, so every time you see this, this is what's going to happen. And it could be any numbers. This could be 3, 8, 9, and it would be 3x, 8x, 9x. So we're going to solve for x. So first I'm going to add this together. So 2 plus 3 is 5, plus 5 is 10. Yep. Divide both sides by 10. And x is going to give me 90,000. So the partner that contributed the least is this guy here, right? He's the least. So if x is 90,000, 2x is 2 times 90,000. So this person put in $180,000. And if you needed to find the middle person, you'd multiply by 3, and then the last person you'd multiply by 5. And it should equal 900,000 when you add it back together. We could do that real quick as a test. So the first one is 180,000, 270,000, and 450,000. Okay, I'll do this hard part. So I've got 12 plus 8 is 20. 4, 6, 7, 9. Okay, so it works. But at any ratio, it could be a 1 to 2. So it would be 1x and 2x. So it can have any number of people contributing, and it can have any numbers in that ratio. But anytime you see this configuration, these are going to go with x's, and it'll add up to the total. The 10x, 2 plus 3 plus 5. So I'll do. And that gave me the 10. Any other questions on that one? The stock market. Stock market is a general term. Oh, I didn't mean to use red, sorry. For any institution which stocks are traded. Okay. Trades are stock market transactions. They're called trades because technically we're trading. I'm trading you money for stock. Or you might trade through buying and selling. Like I might have Microsoft, so I sell it and then I buy Disney or something. You know, that's all that's happening in the stock market is people are switching hands. Like stocks are just changing hands all the time. Okay, the two most famous stock markets are the New York Stock Exchange, which is the NYSE, and the National Associations of Security Dealers Automated Quotation System. Nobody ever says that. We just say NASDAQ. Now, you will hear people say New York Stock Exchange, but this is always just NASDAQ. Now, these are not the only stock markets. There are stock markets in other countries. You know, it's not like the two American stock. It's not like we own all of the stock markets. Like it's not that these are the only two. These are just the two most well known. There's like a Korean stock exchange. There's Japanese stock exchange. You know, there's different ones in different countries. And stocks get traded in more than one stock exchange and more than one stock market. So, like Toyota might get traded in the New York Stock Exchange and the NASDAQ and the Japanese stock market. You know, it's all over the place. They're just institutions that do these trades. They don't own the market on any single one corporation. It's not like you can only buy stocks from these one, place. These are words that you will hear a lot. Okay, when they say the last, that is the price per share of the last trade of the day. Okay, or not for the day, sorry. So last trade made for a stock. Now it depends. If it's in the newspaper, it's for the day. So newspaper, oops, newspapers with an N. So when the newspaper prints the last, it's the previous day. Online, it can be by the minute, because computers track all that. So if you're going to like an online server that tracks stocks and it says the last, that could have been like 2 minutes ago. It's just the last trade that happened. Okay, the close, also known as the closing price, that's the last one of the day. So this is the last price Okay, so the stock market, stocks are sometimes traded, well, no, that's not true. Stocks are traded 24/7, pretty much. 24 hours a day, because even though, like, for example, the New York Stock Exchange runs from 9:30 to 4:30, or sorry, to 4. So the last trade in the New York Stock Exchange happens at 4 p.m. But that's Eastern time zone. There's still like the Japanese Stock Exchange, that's still going. So, there's stock exchanges in England. There's stock exchanges all around the world. So this will be the last price at which the stock was trading during the regular day, depending on which, are you looking at the New York Stock Exchange, or are you looking at the NASDAQ? Because those are by time zone. Okay. High is the highest price of the stock in the day. And low is the lowest price in the day. And then volume. Okay. So it's the number of shares traded in a given time period. That could be a day, that could be a week, a month, a year, an hour. It's just a set time period, and that's the volume. It's just the number of shares. And most frequently, it's listed as sales in the hundreds. So that's the number of the groups of 100. Because sometimes the volumes get really high, and so it's easier to break them into groups of 100, and then you have a lower number to talk about. The 52-week high is the highest price of the stock over the last 52 weeks. So every week, it's a year. 52 weeks is a year, but it shifts a week at a time. So it's in the last year from this week. So we go 52 weeks back this week, and the next week we go 52 weeks back from next week. So it's not like a calendar year. And then the 52-week low is the lowest price. We have what's called a change or net change, and it's CHG, or it'll say net change. I'm going to write this first. Okay, so the change or the net change. We would look at yesterday's closing price, and then when the stock market closes in 2 hours, we're going to look at today's closing price, and there's a comparison being made between yesterday and today. And we can express that as a dollar amount or as a percent. And if it's a positive dollar amount or percent, then today it closed higher than it did yesterday. And if it's negative, today it closed lower. So all you're comparing is the two closing prices for that. You don't have to compare all the prices throughout the whole day. It's just the two end of the day prices that you compare. Okay, and then you get after hours trading. After hours trading occurs after the stock market's closed. Now, this didn't really happen a whole lot back in the old days, because, you know, if you were in America in the 1920s and you wanted to buy stock, it was all done through the phone. Like if I lived in Florida and I wanted to buy stock, I called my stockbroker and told them, and then they called somebody on the floor of the New York Stock Exchange in New York and told them, and then they took a piece of paper and like went and yelled at somebody and bought the stock. Well, once the stock market closed, I could call whoever I wanted. Nobody was going to be able to get anything done. But now we have computers, and a lot of this stuff is done through computers, and doesn't, you know, there's still people on the floors doing it, but a lot of things are happening through the computers now too, in automated systems. And so you get after hours trading. And the way you can tell if after hours trading has occurred is the opening price of the day is different than the previous day's close. Okay, so if yesterday Microsoft closed at 100 and today it opens at 105, some after hours trading has occurred. Because unless after hours trading occurs, it should be the same when it closes as when the next day opened, right? Nothing should have happened to change the price overnight unless trades occurred. So that's how you know if after hours trading has occurred, is if the prices are different from the night before to the next morning. This came out of the book. You don't have to write all this down. We'll just take the data as we need it. Okay, so we have the difference between the high and the low on May 5th. So I'm going to look at May 5th. That's here. Is this big enough? Can you guys read that? Okay. The high is right here. So I'll write them down up here. So the high is $52.60. And the low is $49 on May 5th. So I want to do the difference. Well, difference means subtract, right? So I'm going to do $52.60 minus $49, and that equals $3.60. Okay. On May 12th, it says, what is the actual volume of XYZ shares posted? Okay, so posted means sold. So traded or sold. Those all mean the same thing. And if I look down here, it says sales in the hundreds. And that is 3, 2, 1, 2, 3. So there were 32,000 sales in the hundreds. So I'm going to take 32,000 and multiply it by 100. Well, if I'm multiplying by 100, I'm adding 2 zeros to the end. So there were actually 3,200,000 shares traded that day. Does that make sense? All right. We have, at what price did XYZ Corporation close on May 4th? Okay. We don't have May 4th. We have May 5th. But for this purposes, we're going to assume there was no after hours trading. And so I'm going to look at the open. So the opening on May 5th is 50.10. So I am going to go ahead and say, hold on. Please don't listen to me sometimes. Okay, I was lying. Okay, it opens on May 5th at 50.10, right? That's not the only thing I need to look at. I also need to look at the change from yesterday's, the change from today's close to yesterday's close. So where's the close? Close, close, close. Last. 52.20, and that's a $2.61 change. So my last on 5/5 is 52.20, 52.20, and my change is 261. So I'm going to take that 52.20, and my change is positive, so that means today is higher than yesterday was. So I'm going to subtract it, and I'm going to get 49.59. Well, yeah, close on 5/4 is going to be 49.59. We opened at 50.10. There was after hours trading. Does that make sense? So we need to look at the last and the closing price and the change, because the closing price of today versus the closing price of yesterday is where that change comes in. If it had been negative, I would have added. Because it was positive, I subtract. Okay? And so I want to use the May 4th closing price, that's 49.59, and the May 5th opening price. There was a difference there. There was after hours trading. And I want to find the difference in prices as a percent increase. Okay, so what I'm going to do is I'm going to take the new, which will be the May 5th, and I'm going to subtract the old and divide it by the old. That's how you find a percent change, a percent increase or decrease. You take the newest, most recent, subtract the old, and then divide by the old. So the new is 52.20, or sorry, 50.10, because that's my opening price, minus my closing price, divided by my closing price. So I get oh, yeah, I'm looking at the wrong square, sorry. 51 cents divided by 49.59. And that gives me 0.01028, blah, 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 forever. So as a percent, I'm going to move this 2 places over. And it said to round to the nearest hundredth, which would be here. So I'm going to have 1.03%. So between the close on May 4th and the open on May 5th, the stock went up 1.03%. The XYZ Corporation announced a decrease in earnings. This caused their price stock to drop, and it closed at 44.37. Okay, so remember at May 5th, we closed at 52.20, right? So 5/5 is 52.20, and May 6th it closes at 44.37. Okay, and we want to do the net change as a percent. So this is my old and this is my new, right? The 5th is old, the 6th is new. So I'm going to do 44.37 minus 52.20 And I'm going to divide that by 5220. So 0.15, which is negative 15%. So they had a decrease in their stock of 15%. Sally? So we've got PEMDAS, or please excuse my dear Aunt Sally. Or as one of my students like to say, purple elephants munch daisies all Saturday. Okay, and this is just the order that you do things in. This should be, first is parentheses. That's step 1. Step 2 is exponents. Step 3 is multiplication or division. That's in order. That way. And then 4 is addition and subtract or subtract. Again, in order as you move this way across the problem. So you don't have to go through and do all the multiplication first and then go back and do all the division. You just do whichever one you see first. But you do have to do everything in parentheses first, and then all the exponents next, and then the multiplication or division, and then the addition or subtraction. And here's how I like to think of it. Parentheses, that's the king. He's the most important. Exponents, she's the queen. She comes next. Multiplication and division, that's the prince and the princess. So they're, relatively important, but not as important as the king and the queen. And addition and subtraction is peasants. That's the way I like to think of it. They're not important at all. They're just peasants. Okay. Rounding. You guys know the rounding rules. Do I need to go over these?
5 or more go up, 5 less stay.
Yeah, 5 or more go up, 5 or less stay the same, or 4 or less stay the same. So we'll skip that.